Hi, this is Chris German. Welcome back to the Apartment Dealer Show and Happy New Year. Today we're going to discuss what are the things you need to consider as you're creating your investment plan in multifamily real estate for 2022. Now, as we develop this investment plan, the key thing we want to keep in mind is what steps do we need to take in order to reach our ideal financial legacy. But first, let's take a look at, what happened in 2021. Last year was a phenomenal year for the multifamily market. Couple of things. When you look at how much rents increased over the course of last year, across the nation, on average, rents went up by as much as 11%. Matter of fact, in some areas, here local, close to home, say for instance, the Inland Empire, the rental rates went up by as much as 15%, depending on what city you're talking about in the Inland Empire. That's a huge gain. It's a historic gain. So rents are in a landlord's favor. Second, when you take a look at total dollars invested in commercial real estate over the course of 2021, and here we're talking about, of course, retail, industrial, warehouse, so forth, okay, multifamily. For all the dollars spent in investment real estate last year, 1/3 of the money that investors chose to invest went into the product you own. It went into multifamily properties. What does that tell us? That tells us everyone from mom and pop to the institutional investors see multifamily properties as a secure investment for the future. And rightfully so, because multifamily living space cannot be disrupted like retailers can be disrupted. I mean, when you consider CVS, they announced the closure of several hundred stores. Why? Because they've been disrupted by the internet. They've been disrupted by Amazon. But fortunately for us landlords, our product is not disruptible in that way. Tenants cannot sleep on the internet, if you will. So we see, again, multifamily as a sound, secure investment. Now, third, vacancy rates. Vacancy rates now, or over the course of last year, running up till today, are at pre-pandemic levels. So basically, simply said, if you had a vacancy over the course of last year, like I did, I had to tackle a couple of vacancies in some of our properties, you would have had, assuming you have a good product to offer, you would have had a line of people, good people, qualified people, to rent your unit at essentially above market rents. So vacancy is low. That makes good for a market and for our market. And you know, why is all this happening? Well, you had two things come to a head: supply and demand, right? There's more people that need living space than there are available units. And so it drove up rents, it compressed vacancy. Investors saw this across the country and said, hey, that's where we need to put our money. Now, I said last year was a great year for the multifamily market. Maybe not so good for multifamily landlords, depending on your situation. So there was a couple items last year that we had to tackle with, and some of those are bleeding into this year. Number one, non-paying tenants. Unfortunately, even myself included, I finally, after about over a year of all my tenants paying, had a tenant come forward and say that they were going to be applying for the tenant relief. And if you've had to go through this process, you realize that the tenant falls behind or does not pay several months of rent. They apply, get approved, and then you don't get your check for several months in some cases. So that isn't ideal for landlords. The moratorium, the eviction moratorium, and in some locations, rent increase moratoriums were extended through the year onto this new year, depending on where you own. That is definitely not in a landlord's favor. And I think above all things, landlords have been on the edge of their seat, right? We've heard things like, well, we have the Biden tax proposals that they may increase capital gains, the capital gains tax rate. They may eliminate or alter the step-up in basis tax rule. 1031 exchanges may be modified. So for a lot of investors, as they were hearing some of this bad news, buying into some misinformation, many of them got paralyzed and they didn't transact. And again, we're here today to discuss, well, should we consider transacting as we begin this new year? So this year, what are the things we need to consider? What are the projections we see for this year as we're contemplating what's our next real estate move? To start, the Bureau of Labor Statistics just announced that inflation over the course of 2021 rose by 7%. That's the highest increase on record we've seen since 1982. You look at wages. When we consider wages, when adjusted for inflation, wages actually decreased by 2.4%. And I was surprised by that, especially when, if you've paid attention to, say, places like McDonald's or other employers, what they've raised their minimum wage to. Some places close to $20, more than $20, and yet wages are still down. Third, interest rates. The federal government has promised, and they promised to make good on the fact that they're going to raise interest rates. And when you have historic inflation, economics 101, you got to raise rates. So they look to raise the rates 3 times this year, at least that's what they've shared. And in the first quarter of the year, they look to raise it by at least 0.25%, right? So that has an impact on investments. And then politics, right? There's always some political side to this. So we have midterm elections that will come later in the year, but let's take a look at close to home. Right now, in Sacramento, they're discussing, should we have a single-payer healthcare system? And I'm not here to argue whether we should or not. I'm here to say who's going to foot the bill. You can dream up all the programs you want, and not to say there's not good intentions. Who's going to pay the bill, right? And they're talking about increasing taxes at the same time. So when you have major corporations, because of the tax issue, vacating the state, when you have people with significant amounts of wealth that are saying, see ya, you're not going to put your hand in my pockets, and they're moving to Texas and Florida and Utah, right? We read the reports on this. This all has an effect on our state, has an effect on the market. So I think as landlords, the magic question is really inflation and interest rates. The politics are what they are. Unfortunately, people with greater power are going to be making some of those decisions. And who knows one way or the other what will happen, say, with the Biden tax proposal. We just can't say for sure. But what we do know for sure is inflation is increasing and interest rates are going up. And what will that mean to multifamily? And really, the magic question is, will rental rates keep pace with inflation? Will tenants have enough discretionary income to allow landlords to continue to raise their rents the pace that we've seen, keeping in mind last year was a historic year in terms of rental increases? And will rental rates help outpace as we see interest rates rise? Now, in another video here coming up shortly, we're going to be dissecting a real multifamily transaction to break down for you, well, what does it mean when you hear all the noise about interest rates? Other than, okay, well, we know that means the payment goes up, right? The monthly mortgage payment. Well, what does it mean to the multifamily transaction deal? And we're going to break that down for you. We're going to look at, can a 1% increase in rate, just 1%. It doesn't need to raise 3, 4, 5%. What if we just raised 1%? And you'll find that potentially it could decrease values by 15%. We're going to be sharing that with you in another video. I also want to mention at this time, ensure that you're following us over on Instagram, that you're taking a look at the content we put on Facebook. Not everything is shared, of course, on YouTube. And over the course of this year, we're going to be sharing a lot more content than we have in the past. We've invested in a new studio and some other technology that we're excited to be able to utilize to share this information with you, the landlords. But again, some of this content will only be on Instagram. Other parts of it will be on YouTube, some of it on Facebook, depending if it's on articles and so forth. So ensure that you're following us there. I'm sure we'll put all the links up for you. So the question again is rents. Will they keep pace? Because I think that's the major marker to watch as we consider, well, are values going to go up? What's going to happen with multifamily values? So as we ponder our next real estate transaction, we have, of course, the negative side of the ledger, which I've gone through already. Again, that being inflation, which is here, interest rates, which are rising. Also, we have to mention COVID, right? We have to give a shout out to COVID because this damn thing will not go away. And so what will that mean to the market, right? So that goes on the negative side of the ledger. On the positive side of the ledger, though, keep this in mind, and I think this is very important. Rental rates. Last year went up 11%, highest on record. This year, they're tracking to raise 7%. That'll be the second highest raise for rental rates recorded, second to what? Second to last year, right? So we're going to see a good year for rental rates, assuming there's not a black swan of some sort. Okay, values are intact, if not rising. Rental rates increasing. Vacancy is going to continue to lessen if you have any vacancy at all. Most landlords are 100% full, again, here locally. And I really can speak to the markets that we work. Again, we work with investors who own multifamily properties in both Los Angeles and San Bernardino counties. So this is, when I'm speaking to vacancy, I'm speaking to what's taking place here locally. Essentially, there is no vacancy. And so you have these two sides of the ledger. I would say, again, negative side of the ledger, so long as rents can keep pace, if we're focused on inflation and interest rates, on the positive side of the ledger, we see rents tracking at a 7% increase this year, which means they're going to help compensate for some of what we see on the negative side of the ledger. Bottom line, I think you transact. To quote my good friend Steven Spear, who you've seen me interview, the real estate attorney extraordinaire, he says something like, there's never a bad time to buy real estate, only a bad way to buy real estate, right? So if you procure the wrong financing, if you buy with the wrong strategy, if you have no strategy for substantial improvement, which is a big thing we have to consider, especially here in California, when rent control is law of the land. When we may not have all the insights we need to a particular demographic, which areas are on the rise, which areas does our dollar go further, which areas maybe on a price per unit basis is more affordable, yet you can extract high rents. I just mentioned earlier that in the Inland Empire, rents increased by 14% last year. And if you've watched our other videos, you know that we're, not only do we work that market, not only do we help investors buy and sell multifamily properties in the Inland Empire, we've invested there ourselves. We've been encouraging investors for some time now, consider the Inland Empire, infrastructure's there, and obviously proof's in the pudding, historic increase in rates. So bottom line, transact. That is the theme of this year. If when you're looking at your portfolio, which I call your financial legacy and multifamily properties, look, if you would like more net income, if you would like to own more rental units, if you're looking for more depreciation, if you're looking for more tax write-offs, I would not be paralyzed of what can seem negative in the market, because the things that we should focus on as landlords, values, rental rates, vacancy, and interest rates, even if they increase, they're still historically low. All those things are in your favor as a landlord. Keep that in mind as you strategize on how do I accomplish my goals this year. So when we discuss transact, we're talking about it's either buy, sell, or hold. On our next video, we're going to be looking at the pros and cons of each, especially in light of the current market here in Southern California. Be sure to subscribe to our YouTube channel so that you catch the next video. Give this video a like, share a comment so that we know that this content is meaningful to you. And again, follow us over on Instagram, check us out on Facebook, a lot more content being shared. All of which it consists of, again, on this show, we're bringing you the resources, the individuals, and the content that can help you build your financial legacy in multifamily properties. Chris German from The Apartment Dealer. Till next time.